market structure, and I just picked a random pair, and we're going to start from the beginning to the end of marking up. Okay. So I'm going to completely clear this chart off. And we're going to start at the monthly and work our way down if you have pen and paper and you want to keep notes. Okay, we start marking up a chart from monthly all the way down to the 4-hour or the 1 hour, looking for our entry. The reason we start at the monthly and work our way down is so we can see an overall picture of the market. And we start our markup by using a trend line. And what we're doing is called top-down trending and boxing in the market. When we draw a trend line, we just look at our current move. The reason being, this took us all the way back to March 2017. I'm not trying to corner the market in all the way back to here at 2012. I'm focused on the most recent trend on the monthly. Then we'll do the same thing on the weekly. Looking at the weekly, this really isn't a good area to draw a trend line up here. And also, if you look, we've cornered that up move on the monthly. Okay, some rules about trend lines. 2 touches makes a valid trend. Makes a valid trend line. So we have 2 touches of the trend line. 3 touches confirms the trend. Another thing, you do not want to draw your trend lines through candles or wicks, and I'll give an example why. If I draw this candle through my wick on the weekly, when I go down to my daily, and we zoom out and look at that, you'll see it cut off a couple of forming candles, and it doesn't look like much, but it's 91 pips that we have just cut off of our trade. So I'll go back to the weekly and adjust that. Anytime you want to reset your screen on TradingView, just use the refresh button down here to reset. Zoom in and out as you need. If you need to make it bigger, you can go over here to the right and drag it, which will also allow you to move your chart around. I'm going to take off these for now so we can just see. There we go. Another tool that you can use is your horizontal ray to box in price to see where our possible reversal points are. And this at the top is what we call our supply zone. Is where sellers take control of the market. Down at the bottom, we have our demand zone. Which is the opposite of the supply zone, so our buyers take control of the market. All right, so if you look here, buyers took control. If you look here, almost at the same price point, buyers took control. Here, buyers took control, and it's the same with sellers taking control at your supply zones. So we go down to our daily. Now here we can see we were in a definite uptrend off of our daily the last few days. So we will draw a trend line there. Another thing you can do to show your supply and demand zones is to draw a rectangle. When you draw your supply and demand zones, I'm going to zoom in here so you can see this. You want to focus on the candle that was engulfed that caused the reversal. This was the first candle that got engulfed that caused the market to start its downward trend, okay? And it will be the opposite with the supply zone. You want to focus on the candle that caused the most recent uptrend. So we'll draw a zone here. All right, that takes care of the daily. If you want to draw some additional support and resistance where you had reversals throughout the market, you can do that here as well using a horizontal ray. And these are great for creating your take profit areas. So if you have this were to go up here and reverse, this could be a great take profit area on your daily zone. All right, going down deeper into the charts on the 4-hour, we'll tighten up our trend line. I'll just redraw it. They get a little distorted when you go from a higher time frame to a lower time frame. Again, we're just connecting the dots. We got a valid trend line because we have 2 touches, and we have a valid trend because we have 3 touches. So the market on Euro-AUD is in a definite uptrend. And this is the reversal area that we would start focusing on, because the last couple times it traded up to this area, we had to move to the downside. If you wanted to showcase that, you could show where it sold off and then broke. But that doesn't matter to us anymore because it's in the past, but I was just showing you a break of a trend line. All right, so we're gonna keep following this as a buy until we get a reversal and a break. All right, so you want to trade this pair after you've marked it up. You're gonna start looking on the lower time frame for an entry. So we'll go down to the 15-minute. And we're gonna look at the times that we could have entered this trade. All right. Whenever you have a reversal and a push to the upside, you have confirmations. The market moves in 3 ways. You have your impulse, which was here, a correction.
Guinevere, could you repeat that again?
Yes, and I'm going to type it out as well. In fact, there's a lower, I need to go right back here. You had an impulse, a correction, and then a continuation. So whenever you start looking to take a trade, you need to have a list of rules that you create yourself and ask myself, has this trade met my criteria? Market moves in 3 ways: impulse, correction, and continuation. Okay, your impulse is your reversal. Your correction is a flag, which is your confirmation that the reversal has happened. And a continuation is where you would jump into the trade. Okay, let's space these out a little bit. And we're going to mark these out. So you had an impulse, which is a big move in the market. Okay, after the impulse, you had a flag, or what we also call a correction. It breaks out of the flag and keeps making continuation, correction, continuation, correction, continuation, correction, continuation, correction. Okay, we are looking at December 3rd here. So if we go to the 4-hour, there it is right there. You see you had a bullish engulfing. Does everyone know what an engulfing candle is? And if you had been trying to catch it on the 4-hour, you would have missed a lot of pips. Okay, so that's why we made our entry on the lower time frame. Let me look in the chat. All right, if anybody has any questions, yes, you can unmute yourself and ask, or Grant, if you see any questions, just let me know. All right, let's refresh this. So when this move started, it has been going 816 pips. So from here to here, we had multiple opportunities to jump into this trade. Now, had we been looking to jump in on the higher time frame, we would have missed, let's see, 400 pips before we saw an opportunity for pullback. So that's why, even though we mark up on the higher time frames to see the overall picture of the market, we're going to break it down to our 15-minute to start looking for those flags or those entries. So if we had to go back and count how many entries, opportunities we had to catch that 800 pips, that would be a lot. But you always wait for an impulse. A flag is correction. You don't want to, if you were trying to buy, I'll give you an example of buying too soon. Like you see green, so you decide you're going to buy. So you jumped in right here for the buy. What happened after that? You got your correction. So you would have been an instant drawdown 60 pips before it continued its climb to the upside. Now 60 pips will get on your nerves. It'll make you want to close the trade. It'll make you think that the trade has reversed. So that's why whenever this starts creating its flag, we'll zoom back in on that and see how big that flag was. It had sideways motion in this flag of 41 pips. So if you had got in at the wrong time here, you would have been caught up in a consolidation of 42 pips for a day and 8 hours before you finally got your breakout. So once you learn to trade market structure and you start looking for an entry, you never buy from the top of a flag structure. You buy at the bottom, or you wait until it breaks out and then you jump into the trade. So if you buy from here, you set your stop loss right underneath the flag or right below the impulse. Once you go into profit, you move your stop loss up, and you can do a trailing stop loss, or you can just leave it at break even because you're trading zone to zone. Now, if you are into scalping, you can scalp these moves and take profit. Or if you're into swing trading, just say you caught this trade. We'll look at the 1 hour so we can see some of our take profits. If you caught this trade, once it pushed up to one of your areas right here that we were looking at for take profit, you can move your stop loss up to below here where the pullback begins, and you can close part of your trade. For example, if you took this trade, and if some of you are trying to switch from scalping to swing trading, just say you open 0.10. When it gets there, you can close a 0.05, or if you're trying to build up your patience, close a 0.09 and allow the rest to ride. All right, because if you're not used to trading from zone to zone, this doesn't happen overnight. Some pairs move faster than the other. Let's see how long it took this 800 pips. And it still has a good climb. So from the time it started its climb to here was 18 days for 802 pips, okay? It still has about 200 pips before it reaches the last few areas where it reversed in our supply zone. All right, any questions so far? If not, I'm gonna take this off and mark it up one more time, just in case anybody missed it or there's any questions, and we can start it from scratch.
I have a question.
Yes, ma'am.
It looks like you used the same line to mark on the monthly and the weekly. Was that correct?
I use a trend line, yes.
Right, but it was the same trend line. I guess that's what I'm asking.
If there's nowhere to add a trend line, don't add it. I don't force it.
Mm-hmm.
If there's nothing that needs to be there,
Okay.
definitely don't put it there, because sometimes it will be in a steady climb, and that's probably why, because we see it took 18 days and it's climbed over 800 pips. And I did draw another one, I think, when we got down to the 4 hour.
Yes, yes, you did. And the one that says correction flag/confirmation, is that what the consolidation was? Is that always consolidation, or is it just a consolidation in this
Considered a
example?
pullback. If you look on the 15 minutes, like
Mm-hmm.
this is continuation, correction, continuation, then you had a deeper pullback.
Mm-hmm.
Usually you have one or two good pushes and then you have a deep pullback. And each pair moves differently. When you start marking them up, you will see that. They all have different personalities. And all of them make different types of flags. Some of them, you'll have a buy and you'll have a flag that aims down this way.
Mm-hmm.
Some of them you'll have a buy and the flag goes straight across. I think it was NZD, USD we looked at last week. Had straight, perfect little flags. And some of them have messy flags. It just depends on that pair and its personality.
Okay. Thank you.
You're welcome. So this is a flag. And if you're buying, you're going to buy at the bottom of this flag that's being created or after the break. And once it breaks through that, you can place your stop loss underneath the flag.
Okay.
Because most of us, we know how to mark up the charts. It's just entries. And a lot of us will see a green candle and we'll buy, or we'll see a red candle and we'll sell. We might be in the middle of a move and we get caught up in it and our patience starts wearing thin, or we start thinking or questioning our trade. So that's why we look at the chart from the top down to the bottom, and we make sure that we know what trend we're in. That way we won't question our trade, because you could be in an overall uptrend and you can still sell a correction, but you want to know where you are in the market. You want to know if you're buying the uptrend or if you're selling the correction, and vice versa. So that's why it's important to know what you're doing, so you will know the next anticipated move of the market. So we got our trend line here. I'll take these off right here and go back through those. I usually just clean the whole chart out, but I wanted to leave the typing on there so I wouldn't have to redo that.
Gigi, there's a question for you.
Okay. The purpose of the trend line is to box in price and react to how the market is behaving. It's sort of like whenever you're coloring, you try to color between the lines. So we're keeping the market between the lines, so if it goes outside the line. So anytime that the market is staying above your trend line when an uptrend, if this were to break and start trading down, then we would be in a downtrend and we would be looking to sell it back down to this area. So it's basically a guideline. It doesn't control the market at all, but it just gives us a guideline to see where the market is going. All right. So we have our monthly trend line. When we go down on the weekly, we see we don't need an additional trend line. This market has been in an uptrend since February 2017. And if you were one of those people that position trade and you had held it, you would have gotten 2,600 pips on the move. It would have taken a long time, but some people do trade like that. So in the weekly, we don't need an additional trend line. Now, some people would come up here and draw this. That's at your discretion if you want to box it in that tight. Now, another rule about trend lines, you never want to go across or through a forming candle. The market is closed, So this candle right here represents the whole week. So if we had bought this pair on Sunday when the market opened, we would have made 415 pips just this week, okay? The week prior, it was 452 pips. So what you have, your impulse, your correction, your continuation. So we still see that market structure even on the higher time frame. Impulse, correction, and then continuation. And see, the last time it continued up to here, it tried to break, it retested, and then it fell back down 965 pips, okay? So what we're doing with these trend lines is just trapping the market, and the market acts and we react. Just like anything else in life, there's action and a reaction. So we are reaction traders. We don't control the market, we just follow the market. Now I like to start marking my supply and demand zones when I get to the daily, because if it trades outside that, then I'll just expand my market area. So again, we look at the area where price reversed to the upside. Sellers are suppliers. When you're supplying someone with something, you're selling it to them. And we see that this is an area of strong selling. This is an area of strong buying. Even if we drag this out even further, we see several times that the market bounced off of this area. But we're going to focus on the most recent. And here we could stretch it out even further. If ever you look left and you don't see anything, go up to a higher time frame. But look all the way here. What happened the last time it hit here, here, and even all the way up here? Here, it didn't even make it. So it's a strong possibility once this market gets up here, we could see a reversal again. And we see that its most recent push has been 2,500 pips. So we started with the daily. And we can draw a trend line here on this daily. And I'm just going to take from here to here. And I'll clean it up when I go down on my lower time frame here. And here again, we can take our horizontal ray or whatever you choose to start marking areas that we had a lot of reversal, which would be like support and resistance. So the difference between support and resistance and supply and demand actually reverses the market. Support and resistance just causes hesitation in the market, okay? Because I hear that question a lot. What's the difference in supply and demand and support and resistance? And that's the difference. Supply and demand actually reverses the market. Support and resistance causes hesitation in the market or a pullback. Okay, so going down to our 4-hour, we see that it's still pushing above this trend line that we drew on the daily. And we see looking left, that is a strong area of resistance if we just look through here. So more than likely it's going to continue to push up. As you see, you had a strong push, a pullback, a strong push. Now you're starting to see some exhaustion in the market, which is another indication that it's reaching its previous supply zone. Buyers are losing momentum as we go into the seller's market, okay? So now we're going to go down. You can look at the 1 hour if you want. You could add an additional trend line there if you wanted to. Again, we're not going to go through the wick. I'm going to take this daily off because it's already been violated and broken through. So it really doesn't hold any value to me anymore. And I could extend this up into that zone, okay? So looking at this market, you see it pushes, pulls back, push, pull back, push, pull back, and it's starting to get weaker. So you probably see some more pullback, and then into here, then we can see it break, retest, and then come back down. Yes.
Quick question. I'm having a hard time seeing. Are those support and resistance lines?
The yellow, yes, that's what I use.
Oh, okay.
I
I
just
thought my screen was fine.
it's horizontal rays. I could change the setting just to show you, and it's because I don't like them to be too predominant. But like, you can see that better.
Yes. I was just trying to figure out. I'm like, wait a minute, my screen is going crazy.
No, I just make them faint. So, but I'll make them red for tonight, so they'll be more predominant. Those are areas where in the market, in previous market structure, looking left, and one of the most important things about trading market structure, and one of the number one rules of market structure, is always look left. That is one of the number one rules of market structure, because let's just say we're on the 4-hour, and just say you're just looking at this part of the market, and you're like, oh, it's in a buy, it's in a buy, and you hadn't looked left, and you hadn't put this zone up here. You would just keep buying and buying, and you might get up here and put in a buy. Just say you put in a buy here, all right? Then all of a sudden the market reverses on you and you don't know why. Well, if you look left, it's because every time it got here, so this would be a not so smart area to buy, because every time it has gotten to that area, the market has reversed. So before you enter any trade, always look left and try to determine what did the market do the last time it was at that area, okay? We'll put that back up there. So had you been looking for entry into this market, you would have been on your 15-minute after you saw your number one indicator if you were trying to trade this market based on market structure. Your number one indicator, you are sitting at a demand zone, which is where, looking left, buyers have taken control of the market more than once, okay? We can extend this all the way out here if we want to. I just don't like making them too big. So even looking left on a daily, if you extended it further out, that is a very important zone, okay? It's a very important reversal zone. So this is what caused this reaction to the market. This caused this, and this is just like a cascade effect. Looking left, the market reacted at this price for a reason, and that reason is because it is a supply zone, a demand zone where buyers took control, all right? So let's again go look at our entries. So if you want to start writing your rules and make your own personal rules, like first rule you might ask, is it at a supply or demand zone or a reversal zone? And so the answer to that is yes. Do we have an impulsive move to the upside? Yes. Okay. Try to make this bigger. We can drag that out. So rule number one, reversal point, yes. Rule number two, did we have an impulsive move? Yes. Rule number three, did we have our flag or our correction? Yes. Do we have our continuation? Yes. So you could have gotten in at your continuation. And if you wanted to take profit at one of your zones on your higher time frame that we looked at as your take profit points, you could have ridden it up to here. When it started pulling back, you could have closed this position and waited for your pullback and got in for a second position. Or if you bought down here and it got up here, you could close half of that trade or part of that trade, wait till your pullback is over and place your second trade, and you would have two trades running in profit up here. Some people place 2 or 3 trades when they trade from zone to zone. They stack their trades like that, okay? They would get in at the bottom, After the first pullback, put in a second position. After the third pullback, put in a third position and ride them up to the top. And that's how you stack your trades from zone to zone. And just say you caught 500 pips on that one, put in another one, caught 800 pips altogether on the first move, plus an extra 300 from the second position you put. So now you're up over 1,100 pips. And you ride it on up to the top, you would have 1,000 for your first, about 400 for your second, and another 200 for your third. So you could get, even though this is just a 1,000 pip move, you could get 2,000 pips altogether if you stack your trade. All right, any questions on this before we look at another pair? And you can unmute yourself if you'd like to and ask any questions.
I have a question, please.
Yes.
What time frames do you find most effective to mark up your support and resistance? I'm sorry I might have missed it if you went over it because I was driving, but
I do my supply and demand zones, my main ones on my daily and my 4 hour, and then I put my support and resistance in between on those. I don't go any lower than a 4 hour.
no more than a 4 hour. Cool. Yeah, me either. But all right, I just wanted to get your point of view, and yeah, thank you very much. I appreciate that.
You're welcome. All right. Is everyone clear on what a flag is? Is there anyone not clear on what a flag is that would like to see that again?
Could you repeat that, please? The flag?
Yes. A flag is a pullback on a move that gives you an opportunity for re-entry. See, it pushes up, then flags or pulls back. And that's why they named it a flag, is because it'll either have sideways movement, and you'll have, you'll see the market bouncing back and forth, and then finally take back off to the upside, okay? Or you might have some downward movement, and then it continues to the upside. So if you were buying, you would either buy from the bottom or buy from the breakout, buy from the bottom or buy from the breakout. You don't want to buy from the top because you're going to be caught in this crazy drawdown or consolidation before it breaks. And you're either going to question your trade or just get frustrated. And you don't want to be an emotional trader. So anything like that, that's going to, if you're not used to consolidation of holding a trade, and the longer one consolidates, usually the bigger the breakout. So if it's consolidating, you're finally going to have a breakout, and it's usually a good move. Hey, Grant, I think you meant that for the group, but it came to me privately. You want to copy and paste it to the group. And of course, if you were in a seller's market, it would be the complete opposite.
I have a question.
Yes, ma'am.
How do you know when your flag is done forming?
Okay. It will break out of the structure.
Oh, got it.
Break out of the structure. Okay. And then you'll see another push or continuation. So if you look on the 15 minutes, and this right here, it made a flag, but just made a deeper pullback. And like I said, some of them have pretty flags and some of them have ugly flags. Some of them you can see the flag bigger on a higher time frame. See the flags on the 1 hour look cleaner on this one. So you had your push and a little flag, push and a flag, push and a flag. So we're looking for the green pushes. So the red is our flag. But you could look for your entry on a 5 minute or a 15 minute. Whichever gives you the prettiest structure that you can follow. And also another thing, when we were talking about confirmation of getting into the trade earlier, let's mark off this area right here. We would have wanted to get in this on, let's see, I'm way too far back. December 3rd, 2018, and we're going to look at the 15-minute chart. So on TradingView, you can click Go To and type in the date. instead of scrolling all the way back, which takes us right here to December 3rd. Okay, we saw our break to the upside. It took out our previous push to the downside. And if you look, our MACD has crossed over to the upside as well. So your first confirmation, you're in a supply zone. Your second confirmation, your MACD has crossed over to the buy side. Your third confirmation, you have an impulsive move. Your fourth confirmation, you have a flag. Okay, so we had our impulse to the upside. It flagged. And you could have gotten in from the buy at the bottom here, or when it broke out and then held it up to the top. All right, any questions on that?
Yes, Gigi. What are your settings for your MACD?
Default.
Oh, default. Okay, thanks.
Mhm.
Can
Now-
you repeat? Oh, go ahead.
Go ahead, go ahead.
Can you repeat the confirmations again? The first one is you're at the supply zone. The second one is your MACD crossed over.
Yeah, and even though we're trading market structure, which we're just using the naked eye, these are just confirmations. You would never trade off this alone.
Mm-hmm.
Because see right here, you have a MACD crossover to the upside. And that's why I said it's important to know where you are in the market. So if you were trading off just the MACD and you bought, you lost a lot of money here. Okay, you lost that trade. The reason we're using the MACD is just as a confirmation. We've had an impulsive move, and see also here you were having sell flags. You know, it's sold, corrected, sold, corrected, sold, corrected. It was coming from the upside. So yeah, and always make yourself a list of trading rules. I got a spreadsheet from one of the IML educators the other night on one of his calls, and I'm going to share that in the group tonight. I'm going to pull it up real quick. Let's see. I'll open it up and then we'll look at it. And you can take it and make it yours, you know, customize it. Oh, I moved it. I forgot. I have a Forex folder I moved it to. Hold on just one second.
Sounds like somebody got a mouse finally.
Hey, I always have a mouse whenever I'm doing this. All right. Can everybody see this Excel spreadsheet?
Yes.
All right. Like, see, he has his trading plans and confirmations on here. You can make this your own. And, you know, the Fibonacci, of course, would take us to, and I can cover that a little bit of re-entry after a push, risk management goals. He probably should have cleared this out before he put his actual account size. But you can put your balance, what your PIP goal is for the week, and your actual, and your trading constitution. You can print this off and read it to yourself, because you should always get yourself in the right mindset before you trade. You don't want to be distracted. You don't want to be trading out of desperation. But let's just say your balance is $100. You can change that, and it will go accordingly, and it will tell you what lot size to use for each dollar amount that you have. And you can track over here to the right how many pips you caught. Hey, Grant, do you have that handy where you can throw it in the chat?
I'll do a quick search for it, yeah.
Okay, and here, and it's called Trading Plan, or Trading Made Simple. Here he has his ideal setup, and it's like identify your ideal setup, so you can put your list like a break of structure, a pullback, multiple time frame confluence, which is multiple time frame confirmations, and an engulfing pattern. So, all right, I'm going to stop sharing that and go back to the charts. But that's something someone posted, and I said it would be great to hand out to everyone. And since, you know, he said it was okay to share it, I'm sharing it with you guys. All right, if you were looking at Fibonacci for a re-entry,
Hey, Gigi, real quick, if I can ask this quick question, can you explain that reversal pattern a little bit more in depth?
We hadn't covered that yet tonight. Did you just jump on?
Yeah, the reversal pattern there at the bottom.
Oh, the engulfing,
Yeah,
the
the
impulse.
reversal pattern. Yeah, the one right before
Oh,
that. Yeah, that
okay.
one.
All right, I was going to get to this later, but since you asked.
Oh,
All
sorry.
right, Jamie's already trading, guys, and he trades market structure. And we were talking about flags. There's also a pattern that before I realized what flags were and what this was, we talked about how a flag will either go sideways or like this if it's a buy. If it's a sell, it'll go sideways or like this. Now, if you see a flag to the upside pushing up like that, or to the downside pushing down like this, and your candles are just coming down, which is what we see right here. That is a reversal pattern. That is not a flag. Okay, it usually drops. So right here, we had flags. This opened on a Sunday to a break. This was coming down, right? And instead of creating the flag like it normally does, it threw a reversal pattern. And if it's in a sell, it's called a descending channel. And you see we had a channel and it's descending. And if it had been a buy, you see right here, it was creating an ascending channel. What happened after that? It pulled back. That is a reversal pattern, not to be confused with a flag. Does that make sense to everyone? You see here, you were making your flags, but here it started like just pushing up and then it dropped to the downside. Here, it started doing it to the downside and then it reversed to the upside.
Gigi, I'm sorry, I'm not quite clear on that. So it sounds like you're saying the reversal flags, I'm not quite sure. Can you say again? I'm sorry. Okay.
Okay. It happens a lot near your supply and demand zones. So we were down here at Jamie was looking at this because we were explaining confirmations. And this is something you can look for, is this descending channel. So the market had been in a sell. So you would look for flags to either go sideways or with a little pullback here. But in this instance, it didn't flag the way it's supposed to. It started making a descending channel. And then it threw us our reversal. And that happens a lot at supply and demand zones. And it also happens when you're getting ready for a pullback or a correction. See, we got this push and then it made that channel to the upside. And once you start drawing these, your eyes will start automatically gravitating to them. To learn this, I did what a lot of other people did, and I started on Saturday or Sunday before the market opened, drawing up no less than 25 charts a week. So like tomorrow, I'll get my notebook out and I'll start charting from A to Z and chart up about 25 to 30 pair. I will look at my 5 or 6 high probability trades and focus on those for the week. You know, I'll look at the ones that look like they're at a reversal zone, and I'll look and see if there's any news on them that week, because normally the reversals happen during news. All right, does that make more sense now that you start drawing out? See, because like right here, It flagged and pulled down, pushed up, but then it started going up. It was trying to reverse here, but it pushed up one last time before it pulled up. All right, let's look at another way you could look at, ooh, I've been drawing all over this chart. Okay. If you were looking, we were talking about flags for reentry. Another thing on market structure, when you have your push up and you're trying to gauge your correction, you can draw Fibonacci, and you see it pulled back to the 38th and rejected it twice, then it continued to the upside right here. All right, we'll take this off so we can zoom in on that. So we draw Fibonacci from our swing low to our swing high. Let's take some more of this off so we can see it. It rejected off the 38 and then it continued. Now, whenever you see a push, this is a corrective move. It wasn't aggressive. An aggressive move would have been more of a solid push down. You see these little broken up channels, and then it failed to break the 38. So this would be another good indication to enter our second position for a move to the upside. And you can draw Fibonacci on any time frame. Okay. All right, anybody got a pair you want to look at? Oh, and here's the spreadsheet. Grant has popped it in there if anybody wants to download.
Question.
Mm-hmm.
How would you be able to distinguish a breakout and a flag?
A breakout is a engulfing candle, a big candle like that. You see that? Instead of little tiny candles like this. Let's see. You see this?
Mm-hmm.
That's a bullish move, a big bullish engulfing right here happened.
Okay.
Let's mark up this pair because it's getting ready to give us a good reversal. Unless, does anybody have a pair you want to look at? So sometimes
we look at CAD-yen?
CAD-yen, yes.
Yes, thank you.
All
And
right.
then can you go back to GU?
Yes, sir.
Thank you.
What about after we get through? I'll let you mark up GU. All right.
I sprained my thumb.
Whatever. The reason I'm going to put this here is because we've had a lot of action around that price range right there. See how many times it's bounced off there. If we look at this, we had an impulse correction, continuation correction. So it's been in a big downtrend overall. Just looking at the monthly. On the weekly, we had two fake outs to the upside, but this is a really good line here. We rejected here, 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 here. Had a couple of fake outs, but it just came back, and here it faked this out again. Hit some people were probably expecting it to push up because of the last two pushes. So they knocked out some people had some pending buy orders there or some stop losses there, and they knocked them out of the market. All right, looking left at this zone right here, we do want to mark that up because that has been a big reversal zone. So we could see a reversal there or some correction, especially if it breaks through here and bounces up, because looking left, it's pushed up there the last two times. You can put some additional support down here because we are sitting at this zone and we want to know if it breaks through here where it's going next. So looking left, this is a very important zone. Can move it up a little bit. So if we see this breakthrough here, this would be the next area we would look, because this is also a very important area here. We had a big push when it broke through there of 1,000 pips. Okay. All right, so we got our trend line. We got some supply and demand going on. All right. And like I said, you don't force trend lines. If you don't need them, you don't need them. Here, if we look at market structure, had an impulse, continuation, all these are flags giving you opportunity to get back in the market. And it finally, the bottom fell out. We had oil prices dropped, which caused the Canadian dollar to lose value. All right, so it could come down to here and reverse to the upside. If you're trading this, I would definitely follow it now because it is coming up on a very important reversal zone. So I would start trailing my stop loss or start looking for the reversal patterns. Let's go down to the 15-minute, and you already have a reversal pattern forming there, that descending channel. So just watch it closely. Now, sometimes when the market opens, they do still trail off to fill pending orders they had before the market closed. So you could see it trail off and get here, come up, confirm, and go back to the upside. But that's the area it's sitting at right now is a very important area because, like we said, we always look left, and looking left, that's what has happened past couple times it got there. You see that right there? This right here caused all of this. It had a hard time getting up there, but it pushed up 841 pips. Okay. And if you look at it on the daily, it's been struggling with price around this area ever since January 2016. It's bounced around there. It's only broken through this one price area right here, but every other time since January 2016, it's pushed up. So it could finally break it this time. And if so, these would be your next take profit areas looking left. The first one would be another 200 pips, then 600 pips, then another 1,000 pips. And if oil prices keep dropping, you could see a sell-off of the Canadian dollar because the lower the oil prices, the lower the Canadian dollar goes. All right. Anybody have any questions on that?
No, thank you very much, Gwen. I appreciate that. I've played that all this weekend. Have made some great money stacking with it.
Oh, you were following that oil too, weren't you? Mm-hmm.
Yes, oil and CAD. That's just, if you want to do anything, oil, and then if oil is dropping or raising really quickly, go with CAD.
But because of oil dropping, you could very well see it come at least down to here, another 200 pips. But I would just keep an eye on it because it has trouble getting here. Let's see. And then the yen. What is the yen doing? The yen is not a very strong pair at all. That's why, see, the yen is getting stronger. It's been on a push to the upside. It broke out of my channel I had here where I was tracking it last time. So the yen has gone up too since the last time we looked at it. Remember we looked at it about, what, 2 weeks ago maybe? Or it might have been last week. Let's see what this is right here. Yeah, December 10th, we looked at it that weekend. And the yen since then has shot up, and I'm sure the Canadian dollar has dropped. Yep. So the Canadian dollar went down and yen also went up. So that was a really good trade. When you have one currency going down and the other one going up, that's a really good trade. And that was a good move on the yen.
Yeah, the cat this week, Cat Ian and you, Jay, have been awesome, amazing.
All right. Anybody that was trading anything against the JPY? This is why the JPY pairs fell, because the yen shot up from 0.0061 to 0.0063. All right. Let's see, GU. Is this starting to make sense to everyone? Trust me, once you start marking up these charts, it feels choppy at first, but it starts making a lot of sense. It gets easier to do. Now, two things you can do here is do this, or if you want to add in that support on the bottom, you can. The Great British Pound has been on a big downtrend, correction, down, correction, down, correction, down, correction. We could sit correct and then break down one more time, and that's looking at the monthly. But if you look, it's coming down to a very important reversal zone, because the last couple times it got right here, GU reversed up. All right. Yeah, everybody likes those GBP pairs, Eris. They really pay well compared to, and we're seeing some exhaustion already on GU. If we look, the last time it dropped here, it shot up real hard. The dollar is losing value, which could also cause this pair to shoot up. And we do see it's creating like a descending channel there. With the stock market crashing the way that it is, I would not be surprised to see GU and EU finally break to the upside. All right, going on our daily. We don't need a trend line because the weekly took care of that, but we can draw our supply. I mean, our demand zone down here. If it breaks, we've already had a push up, it could retest it. If it breaks that, that's another 372 pips. So this is what you could see just looking at the daily. See it go up there and then come down. If it doesn't break to the upside, then it's going to break down to here. Because right now it's trapped on their daily. And it's already showing exhaustion. So you could see a reversal, because this right here is a strong reversal point. And those are the pairs that I like to trade. The ones that we see, they're looking like they're getting ready to reverse.
How do you know that they're exhausted?
The candles get smaller and smaller. See how aggressive it was moving to the downside? And then it got here and stopped, and now it started pushing up, and it's exhausting. These candles are getting smaller. They're no longer aggressive. These are aggressive moves, and these small are corrective moves. So it already bounced up once, and you had a bullish engulfing going on here. So it looks like it's going to come down and retest it. It's also trading itself into a channel. And one thing I'll tell you about, when a pair trades itself into a channel, you have a big breakout. You see it's getting lower and lower, and that causes like spontaneous combustion. Finally, it breaks out hard.
Does it break out in, can you tell which way it would break out? Because I've heard that before too, when it kind of gets itself into that little space right there, it'll break out, but I never understood.
My money is on the upside, but we just have to keep watching it and see which way it breaks. Okay. And the thing about these breakouts is if it happened to the upside, that's 800 pips, well, 1,700 pips almost you could catch there. If it came down here and broke up to the upside from zone to zone, you're looking at over 2,000 pips. But we see we just had a climb up right here for over 2,000 pips. So from where it is now to right here, it could still drop another 500 pips before we see it shoot up. So, but you see how it's following this trend line down?
Mhm.
It's
Yes.
retesting it and then rejecting. So if it rejects again, you sell. If it rejects, you sell. Rejects, you sell. So you keep following the trend of the market. And right now it's still in a steady downtrend until you see impulse, correction, and continuation. It's in a downtrend. We saw a little impulse, but nothing aggressive. Like see here, it pushed up 494 pips before it really corrected.
Mhm.
Right here, it just pushed up 182, which is a lot of pips. But when you're talking about pushing it up another 2,000 pips, you want to see something aggressive happen. So
Okay. Thank you.
what you would do is look left to see how it behaved. And see the last time it tried 1, 2, 3 times before it got that push off to that 2,000 pip. And then it corrected back up to the 61.8 of this drop and then came back down to Fibonacci. Okay. Yeah, well, it came to the 78 that time
Mhm.
and then pushed back down. See, it kissed it right there and then turned back around. Whenever we saw this keep rejecting off of that 78, that's a great indication that it was getting ready to go back down to the downside, because it tried 1, 2, 3, 4 times, didn't break through, and then gave us a big sell-off. But yeah, you would just draw your trend line on it, especially on the daily, and follow it down. It's tried to break it 3 times and it hasn't yet. And my bet is it's gonna weaken and then finally shoot to the upside. Especially if Brexit comes out with good news, it's gonna go up real fast. If Brexit comes out with bad news, it's gonna tank real fast and bring us back down to these last post-Brexit prices right here, which is another 650 pips. And that's the lowest it's ever been. So Brexit should be over soon, hopefully. I'm ready for GBP pairs to get back to normal. All right, got some questions in the chat. Anybody else want to look at anything? We'll look at one more chart, then we'll stop the recording, and anybody that wants to try marking up a chart, you can, so you can get some practice on market structure.
How about GN?
How about you let somebody else get you know,
Nobody
I love
else talking.
you already marked them all up anyway. Anybody else got a pair? I talk to him like that. Y'all ignore him. That's my buddy.
I'd like to do EU if we could.
Okay. And now keep in mind that Brexit is going to affect the euro as well.
EU.
This pair has been consolidating. What was it I said earlier today, Jamie? Like 150 pips for the last
Yeah, about 150 pip range.
the last few weeks. So it's
Yeah.
been in a lot of consolidation. I looked at this pair earlier today. So we got our trend line, we got our 2 touches. So it's a valid trend line. You can make a trend line on the top side. I'll be glad when it breaks out too. Yeah, Brexit's been having a big effect on GBP and EUR. It's been in a steady climb to the upside, but it's trading itself into a channel as well, because it finally, this is the lowest it's been since June of 2017. If we were to, is that about, let's see, move it up something. Right there. So that a period of consolidation. So that right there, this little area right here is where it's been trading the last few weeks. it hasn't been keeping good structure. It's just been a crazy consolidation. It would have to break out hard to get back up there, which is 1,000 pips. All right. So this pair just really hasn't done much lately. It's been good for scalping because it's been in a channel, and I'll show you the channel when we get on the lower time frame. You could have been selling and buying it a lot. Right here to here. It's been trading there since October 21st. Or really, you could bring it back here. Let's see, right there. October 17th, it created a channel. And the channel's getting smaller, so looks like one more drop and push up. We could see it finally break out, but it's been consolidating a lot in this channel right here. So if we remove this, you could put horizontal rays on there. And every time it hit the top, you could have sold it. And when it hit the bottom, you could have bought it. So that's basically all it's been doing. And I think it's like 150 pips each way. Well, 250, my bad. It'll probably come back down here again because it rejected off this. You see how it keeps rejecting off this channel up here? That's what EU's been doing. And the dollar has been consolidating a lot too. The dollar's been going up and it's finally starting to weaken. And because the dollar was going up, if you look at EUR by itself on a 4-hour, see how euro by itself has been in this channel. So since euro has been consolidating, and then the dollar has been consolidating, you've had a lot of consolidation. So until one of these does something aggressive, or one goes up and the other one goes down, you can continue to have that consolidation on this pair. That makes sense?
Yes. And can you elaborate on what you mean by it's working its way into a channel? Is that the two blue lines?
Yeah, whenever they meet, usually when you see a pair, and GJ did it for a couple weeks before we caught a huge sell on GJ. So I'll cover that next, just as an example. It was here, it went up and down, then up and down, then up, then down. It's just doing this. And finally, you're going to either see it do that or break to the upside. So once you see it, you would buy it to the previous supply zone or sell it to the previous demand zone. And
Okay,
it's overdue for a breakout, yeah. And you'll see that happening a lot this time of year because they're closing out the market, and then in January and February you'll see a lot of those breakouts happen. Because you just got a consolidating market right now on a lot of these pairs. You're not seeing a lot of breakouts. The reason the CAD pairs have been moving so well is because of oil. And then the Brexit pairs, because of Brexit, it's been having crazy spikes. But like on that channel, on GBP, right there's, I still got it highlighted from the last time we were on. I highlighted it a couple. You see, it traded in that channel, and when it finally broke out, this was the final break. It broke 540 pips. But before that, it was just consolidating in here. And we finally got the drop that we were looking for. Well, actually, it started here. That was your correction, 620 pips. You had an impulse, correction, continuation, correction, all the way down. And then it got here and looking left. This is one of my experimental pairs, so ignore all this. If you see here, that's why we got this push to the upside. And if you see all of this, this is what we got this push to the downside. The reason I had this here, it was trading in a consolidating channel, and I bought it from here and caught a descending channel. I bought from here and caught 220 pips in 8 hours. So I had seen it doing this and I bought, and then it just turned around and reversed and brought us down here.
Hey, Gigi, remember I used to take that formation and thinking it was going to drop and lost what?
Oh God, yeah.
Like almost $2,000?
Learning message.
Yeah, that I'm telling you, man. Market structure is beautiful.
Yeah. That was my aha moment when I learned about ascending and descending channel. All right. Yeah, you see where it's sitting at now. I just drew that out. I guess the last time we were on here, it had stopped. It hadn't even came down here yet, but I see it made its way down. So let's see what it's going to do now. It's at a major reversal zone. But it's also, you see how it had been trading into a channel. I hate to take all this off, but here, let's do it.
Hey, Gigi.
Yes, sir.
Hey, that's the ascending channel. That's the descending channel right there, is it not?
Hold on. I took all my
right
stuff.
there.
Oh, yeah. That's what I just said. It's at a major reversal. So.
Wait, I hope that mug go up.
Well, the dollar, because of our stock market crashing, our dollar
That's because of your president.
Yeah. So I'll take that off. Finally broke that from me. All right, let's go back to GJ and mark it up. It looks like it's getting ready to reverse. That would be a good buy if it happens this. Do we have anything this week? It's Christmas. It's Christmas all over the world.
Yeah, this week has high volatility because of the volume. The volume's going to drop off. And this is the riskiest week of the year coming up.
How many pips is it from here to here?
So it's safe to say you shouldn't trade this week and maybe next week?
If I did anything, I would scalp. I definitely wouldn't swing trade.
Yeah, if you're new, sit it out for a week or two, study, practice what you know.
Me, I already got my study materials out.
Okay.
You see, yeah, it's going into a corner. It's trading itself into a corner. If you look at this area right here, how many times it's bounced up there? You could see one more bounce, and you see how this channel is coming down. Actually, you gotta, yeah. So this market has been trading buy, sell, buy, sell. Boy, those would have been some sweet moves if we had caught them. But that's definitely a reversal pattern. It's making a descending channel. Take those off. All right. Looking right here is a good place to draw your demand zone because of all the reversals happening here. Right there. And a secondary, if it breaks through that, would be right here. So that is a very big push. I think it was GBP NZD that we saw do that. It fell through the first one and broke to the second one a few weeks ago, guys. If y'all remember that we were tracking, I know.
Yeah, it dropped, but then it turned back around and did a full reversal, like 100. It did a full Fibonacci reversal plus.
Yeah. So you had a reversal here, here, and here, and here. So this thing is where it's sitting right now. It has two options: either continue here and go up, or to bounce up from here and go up. And if it falls down to here, my goodness. But that's going to all depend on Brexit. Brexit could push it all the way back down to there, or Brexit could push it all the way back up. So that's all we do is we trap the market and we react to whatever it does. If we get an impulsive break to the upside like it did here on this daily candle, here and here, then we're going to be in a buyer's market. If it broke off and hit that trend line that it's forming, it would still be 820 pips. So that's why you mark it up and trap it. So what we have done is we've trapped it so we can trap it lower. Ooh, look at that. So what I think is going to happen, Jamie, on this pair, and Grant, all of you that already know how I think we're going to see it correct right down here and then go up. Because it's already doing a little funky business. And you see here, it did that. So we could get, if it does what it did here, something like that again. Get a correction and then a break to the upside.
I like it.
Yeah, that's what I'm thinking it's going to do. I'm going to leave that there. All right, does anybody have any questions?
Do that again, Gigi. Do that again. Do that again.
Oh, hush.
No, seriously. Because I've been trying to figure out how to do that for the past week.
Oh, this?
Yeah.
Find a pattern that you think it's going to emulate. And if you look left, right here, you would have had a trend line going on here, and it would have done what I'm expecting it to do here. Go up, test it, come back down, and then break through. So you take your bars pattern and copy what you expect the market to do and drag it over. All right.
Thank you.
All right.
Beast.
That's what I expected to do. All right, any questions on anything so far? Everybody got a set of rules, some notes. Remember, the market moves in 3 ways: impulse, correction, continuation. If you get an impulse and don't get a correction, don't expect a continuation, okay? See here, we had an impulse, a retest, and then it consolidated before you finally got a breakout. GBP pairs aren't making pretty structure right now because of Brexit, so it's hard to see a good. But here you had an impulse, correction, and a continuation. Right.
Can we talk about the difference between impulse and continuation? Is it just that impulse was like one long candle?
The impulse started it, the flag confirmed it, and the continuation just kept on in that trend. So your impulse starts your trend, your flag or your correction confirms it, and then everything afterward is continuation.
Okay.
So you'll have several continuations. See, like here, this is before you had a crazy move with Brexit here. You were on a downtrend. So you had a sell, correction, 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 a deeper correction. But then you had all these little corrections. And this is on your 4-hour. So let's look at this date. And if you look at this right here and you look that way, what happened every time it got here at this price right here? Look at that. So this right here is what was causing all this. All right. This is July 17th. So let's go on the 15-minute chart. I don't know if it'll let me go back that far since the market is closed. Sometimes it doesn't. Did I say July 17th?
Mm-hmm.
See, I got a short timer. Oh my God. 717.
Feed them
All
people.
right. There we go. All right. So usually we see a break and a retest. So you had your impulsive move and your flag was created. And then you got a continuation. Flag, continuation, flag, continuation. You had a little descending channel, which gave us a bigger correction. And the reason it didn't give us a full-blown reversal is because we're sitting here in the middle of nowhere. We haven't even gotten even near our reversal zone, which we see is way down here. So that's why these patterns, depending on where you see them, could be a correction, or if you see them down here, it usually indicates a reversal. But in the middle of the supply and demand zone, it's usually just your big correction. As you see, you had some drops, and then you finally got a big correction of the 61.8 on the Fibonacci. Okay. So once I saw it rejecting off this 61.8, I could have entered another trade. So you just keep getting continuations, and you got these on the lower time frame. You can just see the flags better for your entries. Like if you missed the first one, you get in on the second one, and as long as it's on a downtrend towards your zone. Let's see. I think I had a trend line on there earlier. You could just keep getting in after each flag. And finally here, you got to your zone, which is very famous for pushing it to the upside. Looking left, we have a lot of consolidation going on here, but that's what a very important area where it reversed the last time. And so when it got here, we finally saw an exhausted market, okay? It consolidated for a while, then it gave us another downtrend. Once it got here and consolidated, if we look left, we can see why it consolidated a lot there. That's why looking left is key. It did here exactly what it did here. And it did break up. But when it got here, we saw that it had a major reversal here, retested and pushed back up. So always look left and identify your zones, and that'll give you a bigger picture of what you could expect. So we had a downtrend, a lot of sideways consolidation, then it continued the downtrend. Then we got a break to the upside. It hit that area where it reversed the last time, consolidated a long time, and that's the one we were looking at earlier. And finally gave us another break to the downside. That's why we draw our trend line, supply and demand, support and resistance on the bigger time frames, but we make our entries on the lower time frames. And if we look left, right here, we can see why every time I got here it sold, because it was in a seller's zone. The reason it's called a seller's zone is that's where the market makers, those are important prices for them. Like if we set the settings on this, it's not what I wanted to set the settings on. This right here is what I wanted to set the settings on. They like even numbers, so that probably gave us a cleaner shot. Yep, right there, 14.149.75 is the market. That's a very important price for them. All right, anybody else got any questions?
Yeah, I got a question.
Could you
Glenn.
just repeat that? You said the market makers like what?
They like dealing with even numbers. So when it was getting around 149.75, they were selling off. The people who move the market in the central banks or people trading hedge funds, people who need to do business, like converting GBP to JPY to do business between Great Britain and like a Japanese bank or business, they look at key prices. And you'll notice that most reversals happen around even areas, like 156 right here, looking left is a hot area. Looking down here, 140 is a hot area. You look at this. What was your question?
My question has to do with the Fibonacci's. Say you're running your fib for a pullback, and it's between the 50 and the 61.8. You're still going to wait for that to bounce off the
I start
61.8?
watching the candles,
Uh-huh.
and I do whatever the candles tell me it's going to do. So like, let's just draw Fibonacci in the middle of nowhere. It'll be easier to see it this way. Let's see. All right. So if I had a cell and it started correcting, got here, bounced, here and bounced, and here, and started like just losing momentum, then I would look for a sell. The other candles. I wouldn't, because sometimes it falls just short. Sometimes it might go a little over. It doesn't always make it exactly. A lot of times it does, but if it doesn't, don't worry about that. Look at the structure of the pattern. Like if it were like right here in this area. You look at how those candles are just wicking it and touching it, but never really getting to it and closing it. Like if it were doing that here, if it were just like bouncing right below it and could never get all the way up to it or break it, then I would look. If it's moving aggressive, like strong candles up there, then I wouldn't yet, but it also goes on how many times it rejects off of it. Just look at the actual structure.
Okay. That makes sense.
Yeah.
Thanks.
Mm-hmm. Anybody else got a question? All right. Let's see in the chat. All right. Did everybody get the spreadsheet? Grant has put the another spreadsheet in there for everybody. We like to share helpful information.
You said another spreadsheet? There's two?
Is that a different one you put in there, Grant?
No, I just copied and
Oh,
pasted
okay.
lower.
Oh, okay. Gotcha.
Thanks.
All right. So remember, make that spreadsheet yours. Whatever your rules are for trading, whatever it takes the trade to satisfy you before you jump into a trade. Let's see. I want to share one more thing. All right. This right here, until I started marking up charts, I was like a hit or miss trader. I would make a lot of money one week and then lose it or break even the next week. But when I started going and marking up 25, 30 charts every Saturday and keeping notes on what the market does, that's when I saw a huge difference. I could look at a chart and basically, without even drawing it up, tell what the market was going to do next. So I'm gonna ask a question. Anybody that wants to answer it can mute yourself. Would you rather be a jack of all trades or a master of one? And this is when it comes to trading and trading strategies. And you can have your own opinion. There's no right or wrong opinion. It's what works best for your trading. What would you rather do? Be a jack of all trades, like all the strategies, or would you rather master just one strategy and perfect it first?
Master one.
Master one.
Master one.
Master one.
Master of one.
Me too. And when I first started trading,
Master one.
this is what I was. I was a jack of all trades. I could do everything out there. I learned this, and I said, oh, I'm going to learn everything. So, you know, somebody has a question about this, I know the answer. Somebody has a question about that. But it was the most confusing thing because I was never perfecting anything. So until I started focusing on one strategy and one strategy only, I was very lost. And I stuck with what made sense to me, and that was market structure, because if you look at the market, your eyes are the greatest tools that you will ever have in the Forex market. When Forex first started trading, none of us were probably born because it was World War II. The world was torn. All the economies were broken down except the U.S. economy. And Forex began as a way to stabilize the world economy. And when these people were trading Forex, they didn't have internet. They didn't have computers. They had a ledger, a handwritten ledger of where price was and where the market was, and that's how they did business. So they traded with nothing but their eyes. And then, you know, along came the computers and online trading. It's still, there was nothing but your eyes. So these professional traders, you would have to go higher. Oh, it did break my trend line. Look, I had put that there and it did it. Wow. But anyway, you would have to hire a professional broker and go in there and give them your money, and it would be in their hands whether they bought or sold. And this is all they depended on, was their eyes. They would look at the market and they would make a decision based on nothing but market structure. So while these indicators may help us and may give us confirmation, we don't want to depend on them. So the greatest tool you're ever going to have is your eyes. So that's why market structure made sense to me. Once I learned market structure, I could throw in the Bollinger Bands or some moving averages or the cloud, and it all made more sense because I understood why those indicators were telling me what they were telling me. Because if I saw the EMAs cross, I would know why, because the market had already started in a downtrend to begin with, and those EMA crosses just confirmed it. So does that make sense to everybody? If you train your eyes on the market, you can go to any other strategy and it will just be that much more enhanced because your eyes already recognize what's going on. And since we know the market moves three ways, we already see impulse correction, continuation correction, continuation correction, and that's continuing. And if we look at structure, it could drop all the way back down to here on the monthly before it goes back up again. And you can do that without any indicators. So just like I was showing someone the other day, my friend, he's like, he trades stocks. And I'm like, do you mark up charts? And he said, no. And I was like, you need to learn to mark up charts. And I said, because I said, give me a pair, any pair you're looking at. And he told me he was looking at buying this pair. And I said, don't buy it. And he said, why? I said, because it's created a flag. I said, and it's getting ready to drop. I said, wait and let it drop and then buy. And lo and behold, this is the markup I gave him. And he didn't believe me. It was sitting right here at 6:30. And I told him, I said, don't buy until it gets at least to $6 or below. And he bought, and it dropped all the way down to $5.85. I know nothing about trading stocks. He was listening to the news. The news was telling him to buy this. And I told him, wait and let it drop one more time. And the only thing he said to me is, yeah, you were right. But I told him, I said, it's in a downtrend. I said, it's made a flag. I said, and anytime it makes a flag, I said, you can look for a continuation of the sell. So that's why I train your eyes, learn market structure. And then if you trade stocks, cryptos, currencies, anything like that, once you learn market structure, you can basically tell what the market is going to do. All right. Grant, thank you for recording. You can stop recording now. And if there's anybody new that has never marked up and you would like to mark up and let us walk you through it,